Hello and welcome to the webinar. We will give it a minute or so for people to join. We're very excited about today's webinar. Today we are going to be talking about a new product feature development within the Valutico platform called ValuPlan. We've got a lot of excitement around this new feature, both internally and externally amongst our clients as well. We have a lot of people who have signed up, registered for today's webinar, so we're looking forward to taking you all through it. So today we have a lot of clients and also people who don't subscribe to Valutico. And so we want to welcome everyone who doesn't yet subscribe, and of course all our clients are very, very happy to see you and talk to you and give you this presentation today. Today you will be joined by myself. I'm the VP of Marketing, and Aryan, who is our VP of Product, and he will today be taking you through a demonstration of this new set of features that have been in development for some time now. I'll give a few introductory slides, setting the scene, and then I will pass over to Aryan, who will take you through a full tour. If you have any questions, because it is quite a intricate new development that we have for you today, so you might have a few questions. We are extremely curious to have them. So even if you've got a small question in the back of your mind, please write it in the space allotted that is in the dashboard. I think you'll be able to find it. I can't remember exactly what it looks like, but there should be a space for typing in your questions, and we'll try and get to them on the webinar, maybe throughout the webinar. And then if we can't answer any on the webinar for any reason, then we'll try and get back to you afterwards as well. So without further ado, I'll jump straight into it. I will go through some of the introductory slides really quickly. So for everyone who is already a client and a subscriber to Valutico, this might be news to you, and everyone who doesn't know that much about us yet, this is just a very brief introduction into our background. So Valutico is ever growing. We recently reached the benchmark of 90 countries globally now that count Valutico within them as their platform of choice. So we have 700 clients globally. Our team has been growing very much over the last few years, and especially in product and engineering, which is why we're here today. So the amount of developments in our product now are coming much faster than they have ever before, and this is going to continue at pace in the future as well. We have a range of clients. As we develop our product in different areas, we are attracting different types of clients as well, but we're very interested in the use cases we have for the core clients that we have, and making sure that we develop the product in the right ways for all our existing clients as well. Okay, so just to give a quick overview of what we offer in terms of the different products and services, because you may not be familiar with the entire Valutico ecosystem. Valutico is, of course, our leading core valuation platform, but we also have other modules, optional modules, and other services that we offer. We have Valutico, which is the world's first ESG tool for business valuations. So this incorporates factors to do with environmental, social, and governance, and their impact on the valuation. So you can show clients why a plan for improving sustainability in business operations also has an impact on the valuation. You can use the tool, show the difference between a company that incorporates ESG into its planning in terms of the valuation, and one that does not, and give advice to clients along those lines. My Valutico is a tool for your website. So if you want to use My Valutico, you put it on your website, and it's a way to attract clients who are interested in valuing their own businesses. So it's very useful for certain clients and services. They go on your website, they value their business, get a very quick indicative valuation. You get their details, you then chase them up. And that's been extremely successful with a lot of clients and lots of people like that. Valuation services, if for any reason you want to outsource your valuations, we also offer that. And finally, what we are here today to talk about, which is, well, I won't say anything about it. I'll let Aaron go into it, but it's called ValuPlan. And one final little message from me is if you go on our website, we have guides that we produce that are intended to help teams with valuations. If you have colleagues in your team that maybe are more new to valuations, send them to valutico.com, go to resources in the menu, and then go to valuation guides. A new one that we've just released is a checklist on peer selection. So it's about a 55-item checklist on the criteria you should employ when selecting peers for a comparable companies analysis. So for any colleagues who are new to peer selection, we've given this guide and they can use it to understand the process. We try to be very prescriptive with all the checkpoints in this guide. Okay, so now that I've gone through the introduction, I will be passing over to Arian, who's going to take us through this new development within our platform. So Arian, over to you. I'll pass it over.
Thank you, Alex. So to start with, let's give a brief overview of what you can expect ValuPlan to be doing. The core is that we need some historic data first, then we basically enrich this historic data, and then we create a output, which is a full forecast. So what you can see on the left is we rely on an income statement, a cash flow statement, and a balance sheet to go in. We then use private company forecasts, public company forecasts, and industry benchmarks, and we return a full forecast for all future years. So it cannot be about up to 12. I will show you more once we go to the demo. Again, with an income statement, a cash flow statement, and a balance sheet. And we also offer what we call the fixed asset schedule, the equity schedule, and the debt schedule, and finally the cash and the RCF schedule. If you can please go to the next slide, Alex. The main features that ValuPlan gives you is that you will be able to work with multiple templates to fit your needs, offering you more or less granularity. There are also different methods that you can use to forecast the data. We offer benchmarking, keep the relative number or percentage constant, and you can also interpolate. And I will show you more what this looks like once we go to the demo. You can also benchmark in different ways. By default, we would be using the median numbers, but you can also work with lowercase and uppercase based on the 25th and 75th percentile respectively. And finally, you can easily integrate all of this with Excel. So you can see a nice download and upload button available here. So at any moment in time, you can download the data to Excel, continue there, and then upload the same file back into ValuPlan. You can go to the next slide, Alex. Then it's time for our demo. So let's switch the screen sharing from Alex to me. There we go. This is the main dashboard of Valutico. And over here, we can start a private market valuation. One of the things that we need is a company name. So let's say test company. We need a country. I myself am based in the Netherlands. We need an industry, for instance, software. We need a valuation date, which is preset to the current date. And we need to know when the last actual year ended. In this example, we'll be using 2023. The system also requires the last annual revenue to be known. So in this example, we're using 10 million euro. And you would be able to choose between ValuPlan and Business Plan. Business Plan is the same that we had offered before, and ValuPlan is offers everything that Business Plan offers, but more. We'll give the system a moment to create everything in the background. The very first step that you would be presented with within Valutico is called qualitative assessment. This is mainly used to calculate the discount to the trading multiples within Valutico. For example, a bigger company would have a lower discount, while a smaller company would have a higher discount. And as you can see, there are multiple parameters that you can use and set them accordingly to what makes sense for the valuation you're doing. And also the percentage that you can see over here, you can change them to anything else, as long as the total number still matches 100%. Next, we have ValuEcho, as Alex also briefly mentioned. This is a questionnaire consisting of 29 questions in total in the environmental space, social, and governance. And all of this can then be used to calculate a discount to the cost of equity and the cost of debt, depending if you score higher or lower than your benchmark within the same industry. Then we have peer selection. Peer selection is automatically set based on the country and industry chosen. So in this example, I was doing a valuation for a software company in the Netherlands, and I will get these 15 publicly listed companies by default. Let's say that I want to remove one, then I can do so. And if I want to add one, I can quickly type something here, or I can use the advanced search to search across multiple data sets, multiple regions by company name, by market cap, etc. These companies will come in quite handy as we move into ValuPlan, because these are key for the way that we benchmark the data. As you can see here, we offer 5 different plans in total, starting with P&L, which is the most basic version, which only covers an income statement, where we start with the net sales number. By subtracting several expenses or adding certain incomes, we get to a net income. The basic plan is very close to the former business plan module that we have. Here we have the same income statement, but now also a limited version of the cash flow statement and several fields that make the balance sheet. The advanced plan is the first one that offers an integrated three-statement model. So here we again have the same income statement, which ends with the net income. The net income is then reused for the cash flow statement. At the end of the cash flow statement, we have a cash figure, and this cash figure is then reused as the starting position for the balance sheet. And here you can also see that we have the subtotals, total assets, total liabilities, book equity, and then finally total liabilities and equity. And what's important to mention here is that the balance sheet will also automatically balance, provided that the balance sheet of the last actual year balances. 2 more templates to mention, which won't be covered in a lot of detail today, but I do want to mention them from a high-level overview. Here again, we have an income statement, a cash flow statement, and a balance sheet, but covering several additional line items. And next to this, we also have 4 schedules called fixed asset, equity, debt, and cash and RCF. And these are meant to combine the fields that have a close relationship with each other. So CapEx, depreciation, and amortization, and fixed assets are closely related with book equity that can be said about net income, change in equity, and dividends paid. For the debt, it's mainly about the split between short-term and long-term debt, but also keeping track of your debt maturities. And within the cash and RCF schedule, it's very much about the minimum cash balance that you want to have to, again, combine a lot of data from the cash flow statement and to also automatically calculate a revolving credit facility where applicable. Let's start today with the advanced plan. Once you enter, you get this overview giving you an indication of what kind of colors you can expect to see once you see the actual data. So white will mean that we're dealing with a calculated number, so a number that you can't directly set but has been calculated by the system. If there's a box around it, it means you are still allowed to make a change to it. Green means that it's either a default value or a value taken from the benchmarking data. Blue is a manual input. So it means you have set the number yourself in the system, or you have used our Excel upload to set the number via this route. Finally, we have red. Red is something that you don't want. That means that the entered value isn't valid and that you will need to make a change. The most common occurrence would be that you have entered a negative number that should have been positive, or maybe the other way around. You can also immediately start from an Excel. I will show that a little bit later. Or you can say, no, I want to start with the last year's sales number instead. If you work with the Excel, you can download a template here, which is completely blank, allowing you to enter the data there and then upload it into Valutico. You can choose how to work with benchmarking data. So right now we offer two options. You use the peer group, or you're going to be doing things manually. For the presentation today, we will be relying on peer group data. Finally, you can give the scenario a name. By default, the name of the plan chosen is used. But let's say that you already know that you want to distinguish between maybe a more pessimistic scenario or a more optimistic scenario, or maybe more a neutral scenario. You can, of course, also say that this is going to be our optimistic scenario. We create the business plan. The system doesn't need long, and as you can see, we immediately get a full statement shown. So where are we getting the data from? The 10 that you see at the start is the same 10 million that I entered at the beginning of the workflow. All of the other data that you see, it's either a default value, or we are relying on the data that we see here in benchmarking. When I go to the benchmarking tab, you will see the same companies that we had selected before in the peer selections tab in our workflow. So I would have about 14 companies in total. We see the historic data for 2023, and then we see the forecasted data for 2024 and beyond. As you can see, at a certain moment, certain companies won't have any data anymore, like data lags for 2026, where we don't have the data point. We are relying on our data partner, S&P Capital IQ, to provide us with this data. And this data is based on analysts working in the financial sector that are analyzing the companies shown, and a consensus is created throughout the industry what the different analysts predict this particular company to do. And that's the number that you then see here on screen. Taking those different data points together, we calculate a median, we calculate a lowercase, and we calculate an uppercase. We do the same for a other operating expenses margin. We do the same for the EBITDA margin, the EBIT margin, the D&A margin, the net income margin, CapEx as a percentage of net sales. And finally, we have several balance sheet working capital related items like accounts receivable, inventories, accounts payable, cash as percentage of net sales, debt over EBITDA, and asset turnover. All of these numbers are the ones that we are going to be using within financial projections. If I open net sales, I can actually see those same numbers. So here I see 4.6, 7.5, 7, which are the same numbers that I should be seeing here, which are 4.6, 7.5, and 7. Let's say that I find the numbers too conservative because we are trying to create an optimistic scenario. And I can at any moment in time say, I don't want 4.6, maybe I want 8. I press enter, then the number turns from green to blue, indicating that this is now a manual input. As we saw before, those colors can also be seen here. And now this number changes while most of the other numbers stays the same. Why? It's because here we can set the forecasting method on a field by field level. So by default, net sales is using benchmarking data, but I can also switch it to keep constant. If I do, this 8% will be taken throughout all the years, but specifically for net sales, our system defaults the terminal year to 2% to basically try to follow the inflation rate, which tends to be 2% in the long run. I can also work with interpolate. And what interpolate does, it takes your data, which in this case is the 8% for 2024, and tries to move it into the next data points, which in this case is the 2% that I have at the end. And so we create logical intervals to move from 8 to 2. If I switch back to benchmarking data, everything that wasn't set by me will now become green again. The number that was set by me remains blue. Only if I delete the data, I press enter. Also, this will return to a benchmark. As shown you briefly, we have also the lowercase, which will also make the net income figures smaller, and the uppercase, which should now make the net income figures bigger. So this is something that you can choose on a scenario level. As this example is also meant to be an optimistic scenario, I will leave this one on uppercase. As we then start to move through the income statement, it makes sense to first look at 2023, as 2023 is the historic data. So here it's also a natural point to maybe want to move to Excel. So you can download the file at any moment, and you can also upload the file at any moment. So let me quickly show you what such a file looks like. This is an example of a file that I have prepared up front. So here you see the same data fields. Again, net sales, other operating expenses, and EBITDA. But EBITDA is a good example to explain, because you should not have both operating expenses, net sales, and EBITDA all be set by the template. One of them has to be calculated. And the pattern that we have chosen is that net sales and other operating expenses would be set by you, and that EBITDA will get calculated as a result. So you can kind of play out this scenario by taking the sum of the two fields, and then you of course also get 2. And the same will happen once you upload this file. You don't have to worry that there's already data here. Any data that we will calculate on our own will be ignored when you upload the file. So the file upload pattern should behave without problems when uploading this particular example. Within the cash flow statement is mainly the capex and the dividends paid that you can set for the last actual year. And then in the balance sheet, you can set pretty much all the numbers, but again, with the exception of the subtotals like total assets, total liabilities, and total liabilities in equity. These are 3 numbers that have to be set, or so that will be calculated by the system. Let's make the example a bit more to the point. So let's say that we know all the numbers from the last actual year. I will make a couple of adjustments. Let's say that the total operating expenses was 7. I can enter this as either -7 or just as 7. In both scenarios, the system will set the minus, because other operating expenses is only allowed to be treated as an expense. EBITDA will get calculated, and also the EBITDA margin will get calculated. D&A is currently getting its value from the benchmark. But let's say again that I know that last year we had 1 million D&A. Then we get EBIT. The EBIT margin gets calculated. And for the interest expense and the interest income, we are currently relying on benchmarking data as well. But I will be setting this one to -0.5 and 0.1. Leaving me with an EBT of 1.6 and then a tax of 0.4. This tax of 0.4 is calculated automatically because we have a corporate tax rate for the country I'm using, which is the Netherlands, of 25.8. Again, should I know that I actually was using a different tax amount or tax rate in last tax year, I can override it. But in this example, I will leave these numbers as is. As mentioned in the cash flow statement, we have capex that can be set. Again, here we are relying on benchmarking data. So let me change this one to 0. Let's do it slightly higher, 1.5. Dividends paid. We default the dividends paid to 100%. So whatever net income you would have would automatically be assumed to be fully paid out as a dividend towards the shareholders. If you want, you can either change the number itself manually, or you can actually change the dividend payout ratio manually. Now we get into the balance sheet. And here you will see this particular error message, because the system does not set either fixed assets or book equity automatically. These will always have to be set by the user. So let's say that fixed assets is 5 for the last extra year. The moment I set this one, you will see that most of the numbers already start to turn black, but we do still have to have 2 red numbers here at the end. So maybe it makes more sense if I do a slightly higher figure, and now I have everything red, and you can see that this message has now disappeared. Book equity is also not set automatically. So let me set this one to 10 for this example. And again, as soon as I do, these figures all get put in automatically. Now other non-current liabilities becomes red. That's because we are using this field to try to make the initial year balance automatically. But in the end, it's of course always wise to ensure that the numbers make sense. So let's ensure that we have data for everything. So cash is again using a benchmark. Let me change this to 6. Accounts receivable, I will change to 3. I'll change inventories as well. And other current assets, investments, other non-current assets. Okay, so now I have a total assets of 18.4. And right now I also have a total liabilities and equity of 18.4, but that is because this one is currently shown as negative. If I make this one a bit higher, I now get to 19.7. So let's make this one also a little bit higher. That should be 1.8. And now I can see I have a clean balance of 0. And you can also see that all the subsequent year also have a nice balance of 0, as it should be. Having put data for the entire historic year allows us to go back to the future. Here we have 2024, still using the benchmarking numbers. The same is applicable for other operating expenses. So now we are predicting the EBITDA in 2024 to be 2.6. The EBIT is predicted to be 2.3. The EBT is predicted to be 1.9. And then finally, you can see that the net income is predicted to be 1.4. This 1.4 becomes the opening position for the cash flow statement. The D&A number is taken from the income statement. So should I change this 0.4 to a slightly, let's say slightly higher number, let's make this for instance 4%. Probably due to rounding, still 0.4. And now we have change in NWC, so change in net working capital. This might also be a good time to show the tooltips that we have. So here we can see that change in net working capital is based on these 5 fields: change in accounts receivable, inventories, other current assets, accounts payable, and other current liabilities. The same 5, of course, that I see here. Then this one is calculated as accounts receivable previous year minus accounts receivable current year. So if I have a look, accounts receivable, I move from 3.0 to 3.3. So if we take 3 minus 3.3, we get minus 0.3. The same is applicable for the other fields. So all of those together would lead to a net position of minus 0.4. Then we go to cash flow from operations. So here we take the net income number, we add change in net working capital, and we add D&A to get to a net position of 1.4. In the cash flow from investment section, we have again CapEx, we have change in investments, and we have change in other non-current assets, as the tool will also show, for a total position of minus 0.5. In the cash flow from financing section, you can see change in equity for the first time. So the book equity figure that we show at the bottom, so that's the book equity figure over here, you can currently see that it's kind of left stable. So why is that? We calculate these numbers by taking the book equity from the previous year. So when we're talking about the number of 2024, the starting position is the book equity of 2023, which is currently set to 10. We add the net income, we add the change in equity, and we add the dividends. And the reason why we're adding the dividends is because we show them as an expense, we're showing them as a negative. So if you look at these numbers, we have change in equity, we have dividends paid, and we have net income. 1.4 is the same as the minus 1.4 here, because we are using a 100% payout ratio. If I change this one to 50, then this number will change. Change in equity remains the same. And now we should be able to see that the equity starts to increase. The future years are still basically stable because these numbers are still 100%. And so if we maybe slowly move this up, and so that over time we are slowly going to be paying out more and more of the profits that we are making, then we should also be able to see that the book equity over time starts to grow slightly less because we're paying out more to the shareholders. The other way that you can make change to the equity is to just do it manually using the change in equity field, but as you can also see, it's basically an optional field that you don't have to use. All of this together becomes a position called cash flow from financing. So here we look at the change in debt, the change in other non-current liabilities, the change in equity, and the dividends paid. So in this case, we have 1.6 or minus 1.6, I should say, as a total position for cash flow from financing. This is actually a good moment to show you another feature that we have, because you can also condense the different tables within ValuPlan to a more focused view. So in this case, I'm only looking at the main subtotals of the cash flow statement. So I have the cash flow from operations, investments, and financing, and these three together will become the net cash movement for the period, as you can see here. So 1.4 minus 0.5 minus 1.6 will in this case be a net position of minus 0.7. Then we have the cash opening balance, which is the same cash figure that was entered by me manually here. It's repeated. Minus 0.7 plus 6 will become 5.3. That 5.3 is repeated over here. And then from here, basically all the steps that we did before, like in the income statement, and that we already did in the balance sheet, will be repeated once again. All these numbers taken together will become our total assets. All these numbers together will become our total liabilities. We have the book equity on top of it to become the total liabilities and equity. This is basically the entire flow within financial projections. So you can collapse it even further, or you can also expand it to its fullest. So this is kind of the maximum view that you can create for yourself, where you're seeing all of the numbers, both with a relative number and with an absolute number. And where applicable, we have three options for forecasting, with benchmarking, keep constant, and interpolate. While for others where we don't have benchmarking, let me show an example, for instance, other current assets, then we only show the two options that we do have. And for some, we don't offer any kind of forecasting, because these are numbers that get calculated based on a logic like this. The same can, for instance, be said about cash, and the same can be said about book equity. Let me also show you a few other features that we have within ValuPlan. There's a validation tab where we show several analytical tools to allow you to easily compare this setup with setups that you have done before. We have the EV-EQV bridge, or in other words, the enterprise value to equity value bridge. Here we start with the debt number that we have calculated from the 2023 number in financial projections. We subtract the cash number to get to a net debt of 1.96. But you can also see there are several fields that you can use next to these. So by default, we have included a line item for pensions, non-controlling interest, and minimum cash. And you can also create additional positions on the spot. So, additional position, and then you add it. Next up are the valuation relevant cash flows. So here we show you an overview with all the numbers that are going to be reused within the valuation screen. Starting with net sales, EBITDA, depreciation and amortization, EBIT, and tax. This tax is slightly different than the one in financial projections, because here we are actually relying on EBIT to apply a tax rate, while in financial projections we are relying on EBT and applying a tax rate. The next number is the NOPAT number, which is simply the EBIT and then the tax subtracted from it. And you see many fields where we don't offer a 2023 figure. We do show that for net income. And then we show a few additional metrics that will play a role in the valuation overview, namely the tax rate, the net debt, the blended interest rate, the dividends paid, and the book equity. For the forecasted years, we want to be able to move from NOPAT to free cash flow. We do so by taking the absolute value of D&A. We take the negative value of CapEx. We take the change in net working capital number. We take the change in non-interest bearing assets, which we calculate as change in investments plus change in other non-current assets. And then we take the change in other non-interest bearing liabilities. So 1.6 moves into 1.3. We apply the tax shield on interest, which we calculate by taking the net interest expense, which you can also see here, which is just interest income plus the interest expense. We multiply that by the tax rate and we multiply that with -1 to get to 0.1 in this example, giving us the total cash flow. We subtract or add or subtract depending on the position of the net interest expense to get to change in, sorry, I'm saying not completely correct. To move from total cash flow to flow to equity, I should say it correctly, we take total cash flow, we take the net interest expense, the change in net debt, and the change in investments, and then we get to 0.7. And here you can see the different numbers that make up change in net debt. And then finally, other effects is any discrepancy between the net income and the flow to equity. So in this case, it's a 0.7 difference. All of these numbers are the ones that are going into the valuation. The final part to explain is credit ratios. This is a bit similar to validation, where we're showing you additional metrics that are especially relevant when considering the credit rating of a company. As you can see them over here. A few parts I haven't shown you yet are the time frame. You can here add up to 4 additional historical years, get to 5 in total. So this little vertical line that you see over here is the difference between the historics on the right and the forecast, sorry, the historics on the left and the forecast on the right. You can also include additional future years, making it a little bit longer. And then, of course, we can also create a new scenario. When you do, you can choose to start from scratch or to duplicate an existing scenario. In this case, I will start from scratch. Let me also quickly show you what the different templates look like. So for instance, the basic plan. The look and feel will always be as close as possible to the one that you saw before. The income statement is in general quite similar across the different templates that we have, but now you can see a much more limited version of the cash flow statement and also a more limited version of the balance sheet. The P&L plan will show you just the income statement. Cost by function and cost by type They are quite similar. They are even more extensive than the advanced plan that I've shown you a minute ago. So here, for instance, also have an additional subtitle, or sorry, total called gross profit. We have additional line items in the cash flow statement. Within the balance sheet, we also create additional subtotals for total current and total non-current assets. We have additional line items for prepayments, construction in progress, other receivables, deferred expenses. We have again the subtotal total current liabilities, total non-current liabilities. Here we see the RCF coming into play. We have a fixed asset schedule, as mentioned before, where we try to combine the different fields that have a relationship to fixed assets, in this case CapEx and depreciation and amortization. For book equity, we do the same, but this time we repeat the net income, so you can see that you can't edit it here. We have the change in equity just like before. We have the dividends paid. For the debt schedule, we make a distinction between the short-term and the long-term debt. So as soon as I enter a number here and here, this becomes 8, which will then be reused as this number in the balance sheet. And finally, the cash and RCF schedule, where you can enter the starting position of cash. So let's say that you have 10 cash in the last actual year. You can set a minimum number over here. So let's say that you want a minimum cash of 5. I should actually make it slightly bigger. So in this case, I basically tell the system that I want to have more cash than I would have based on my financial projections. So because it's expected that I would have 10.2 cash at the end of 2024, but I want to have 15. So the system understands that I now actually need an RCF for 4.8 million. That becomes a drawdown over here. And this drawdown becomes an opening balance for the RCF. And if I then say in the next year, I actually need slightly less. So here I only need 12. Means that I need less cash than my projections are expecting me to have. So that means I actually can repay on my RCF 3.3, leading to my RCF balance, in this case of 1.5. And if also in the next year, I don't need as much cash anymore, it will again repay, but now it will only repay the remaining balance because the total balance in the RCF is 1.5. It will only repay the 1.5. Okay, then the final thing that I want to show here is you can also delete these different scenarios that you create. So I'm going to be doing that to only have in my example one left as I move into the valuation. Or actually, no, let me keep 2. Should be sufficient. Yes, okay. So moving on towards the transaction screen. So this is a place within Valutico where the company that we're doing the valuation for, in this case a Dutch software company, is again used to find 15 similar M&A transactions within the market. So here you see some in Norway, in the UK, in the Netherlands, in Switzerland, or in the software space. This seems to be a little bit of a weird one, so let's take this one out. And sometimes it can also be sensible to take out a couple that seem a bit old. And also here you can use our search to find based on different data sets that we support, like S&P Capital IQ, Bolhurst, and EMIS, or filter by industry. You can filter based on the deal value, on the date and when the transaction took place, even on the bidder or target company, if you know the one that you're searching for. And you can, of course, also filter by country or even by region. So let's say that you want Western Europe software. You apply your filter. You see that we have over 2,500 transactions available for this particular query. Okay, the next part is then the valuation screen. Here the system will need a moment to perform its calculations. And here you will again see immediately see all the different numbers that make the calculations. Sometimes the data is outside of the range, as you can see over here. And here within change parameters, you also have the option to switch between the different scenarios that you created within business plan. But the data that we will be seeing here will be based on the data entered in the previous screens. The final step within Valutico is typically the export, where you can choose to generate a valuation report in Word, a valuation report in PowerPoint, where we offer both our classic 4x3 example or a more modernized 16x9. And I actually want to show you this one real quick as well. So if you click on export, it will take a moment to generate the export. And as you can already see here, we support multiple languages like German, Spanish, French, Italian, Portuguese, Polish, and Dutch for this particular export. And for our Word version, we also have a custom report available where you can download an example. And this custom report works with these placeholders, where here you see the description of what they mean. And sometimes, like the net debt bridge, by using this particular placeholder in your document, you will then get the entire net debt bridge chart inside of your Word document. Then let me quickly switch to my PowerPoint example. And then this is what it would look like. So you will have one slide with the income statement where we do show both the absolute and the relative numbers. We have the same for the cash flow statement on one slide, and we have the balance sheet on one slide. I want to thank you all for your participation in our demo. Alex, maybe quickly to check in with you. Are there any questions that we want to try to answer?
Excellent. Yes. Thank you very much, Arian, for that. Shall I? I'll share my screen with some contact details. So if anyone has any open questions about the presentation and demo that you've just seen, please do write them now in. So I'm fascinated by the forecasting via the benchmark in there, Arian. Could you talk us through those options that that you went through with interpolation and the peer selection? That would be very interesting to hear more about.
Yeah, you would like to me to do that now, or?
Yeah, sure. Yeah. Do that.
Yeah. So there are basically three options that we support. So keep constant, the name I think says it all. And so you enter a specific percentage, and then we use that percentage to carry that forward into the future. So if you take 5% for 2024, then the system will apply that 5% for all the other future years as well. If you work with interpolate, you take, for instance, 2% at the beginning and 10% at the end. And so then you move from 2% to 4% to 6 to 8 to 10. And you can even do that one time going up and also one time going down. So if you take 2% to 10%, so you for instance have 2, 6, 10, and then you enter at the end 4% again, and you go from 10 to what is it, 7, I guess.
Yeah.
4. So that's how these two options work, and that can even be a combination of interpolation and the benchmarking data. And the benchmarking data, it's always coming from our peers. And so the peers that you select, they represent the industry and represent the median figures of the industry. Or if you choose for the lowercase or the uppercase scenario, they represent the 25th or the 75th percentile of the industry. And so if you say, I start with 10% and I want to end with my benchmarking group, which might be 3% at the end of your cycle. So then again, it takes that 10% and moves it to 8.5, 6, 4.5, and then slowly into, for instance, 3% or 2%, whatever you have at the end of that cycle.
Excellent, excellent. Yeah, thank you for that. So I should mention, just while other people, if you have any questions, want to write them in now. If you're a current client of Valutico, then just reach out to your customer success representative if you're interested in accessing these new features. And if you don't yet subscribe to Valutico, you can just go to our website.
Yeah. Alex, I think we do have one question here. It will be a book about all those new. I think this is referring to our manual. So it's good to mention that the entire Valutico platform comes with a manual, and we have also updated our manual with a new chapter covering everything with ValuPlan. So yes, we offer that as well.
Okay, fantastic.
And I think, Alex, you also made a recording of this session itself. So anybody that might want to watch it back at a later time, we have some options there as well.
Absolutely. Yeah, that will be shared with all the attendees. Do we have another?
Confirmation by our client that that was exactly the question that they wanted to know.
Excellent. Okay. Well, unless we have any more questions, we'd like to thank everyone. Thank you, Aaron, very much for the demonstration of that feature today. And thanks everyone for joining us. Any final questions that you have, then send an email. Talk to our CSM team who are on the website on the bottom right. You can directly talk to a member of our customer success team whenever you want. So please feel free to do that. And unless you have any final comments, Arian, I suppose we could wish everyone goodbye.
And of course, if you're not yet a client, then please reach out to our sales team if you're interested to learn more and to book a demo where we dive deeper into the platform as a whole.
So, thanks, Aaron, and thanks everyone.
Thank you, Alex.
And have a lovely day.
Bye, everybody.
Bye-bye.